Hi, we can start.
Hi everyone, welcome to the webinar, Breaking the Taboo Around Debt Advice in the Digital Age. I'm Mason Rizvi, I'm the founder and CEO of Elephanti. I have 15 years of experience in banking with the likes of JP Morgan, United Overseas Bank, etc. And I'm really delighted to be joined by a panel of experts who are really entrenched in this industry. So we've got Marilyn Banister, who is a money advice supervisor at Citizen Advice Leeds. She's been with Citizen Advice Leeds for 20 years, 15 of those doing debt advice under the legal aid contract. She currently manages the money advice team with 8 advisors, which is funded by Money and Pension Service for primarily face-to-face advice. And we've got Matt Dronfield. He's the head of Debt Free London, which is part of Toynbee Hall. Debt Free London is responsible for London-wide coverage of debt advice, also through Money and Pension Service. We've got Muna Yassin, who's the Manager Director of Fair Money Advice. She is responsible for the debt advice and providing financial education through the charity Fair Money Advice. And then finally, we have Paul Bowden, who's a partner at Wilkin Chapman, a law firm. Wilkin Chapman is currently working with approximately 100 local authorities across the country, providing advisors direct contact details with peoples in the councils to help resolve challenges. And he's trying to encourage better engagement between local authorities and debt advisors. So today's theme, we are trying to explore that there's always been a taboo around debt advice. For individuals struggling with money problems, admitting their situations, reaching out for help is often the hardest part. The problem is the longer people wait to get support, the more costly it becomes. Digital channels for debt advice started to emerge in the UK in recent years, and they have proven to be successful in reaching more people as it reduces the shame element associated with debt, but also allows people to engage with debt advice at their own time. And with COVID-19, with isolation and all of us being stuck at home, it's pushing the digital services to population with an increasing number needing debt advice as well. And we believe this is the right time to finally break that taboo around debt advice in the UK. So what we're trying to achieve today is to encourage people to get debt advice, digital debt advice, and break the taboo around it, and enlighten the industry on advances done on the debt advice sector with the help of technology, and motivate charities and debt advisors to include digitization of services in their strategy. So just as we start, I just wanted to point some key challenges that we face in this industry. So, a significant portion of the UK economy population faces big challenges with money management. So you have over 9 million people who are over indebted, 10 million people who don't save at all, 11 million people who have less than £100 in savings to fall back on. And similarly, when you talk about debt advice, there is a major challenge to raise supply of debt advice, consistency and quality of debt advice from what is available in the market. And on the demand side, so this is from individuals, there are a range of barriers that dampen consumer demand. Consumers often don't have the motivation to get information, guidance, or advice they need. They also might not have the knowledge, skills, or confidence to use what is available. So as an example, the level of engagement with both money guidance and related financial advice is generally too low. A key problem with debt advice, which is a regulated financial service, is that a large portion of the people who need advice engage with it too late in the process. So Christian Against Poverty research found that 33% of their clients had waited over 3 years before seeking help. 51% had waited more than 2 years. The longer you wait to seek debt advice, the greater your debts, the fewer your options, and the harder it will be to engage with money issues. So a key challenge also is to help people to engage with information, guidance, and advice at the right place at the right time. So if people engage earlier, there is a higher chance that they will make better decisions, and this will result in better outcomes. So with that, I'm just going to bring in our key speakers. So just so that they can introduce themselves. So first, Marilyn, please tell us about yourself.
Hello. Yeah, I'm Marilyn Banister. I'm a service delivery manager at Citizens Advice in Leeds. I joined the service as a volunteer in 1997, so a long time ago, and I got involved in doing debt advice since 2002. We were a very small team. We had legal aid funding, and it was all face-to-face work pretty much. The team expanded once we got financial inclusion fund money from the Labour government in about 2006, equivalent of 5 or 6 members of staff doing full-time debt advice. And we've continued to have that through the Money Advice and Pension Service project, which there again is a face-to-face project. About 67% of our clients need to be seen face-to-face to meet that contract target. Most of our clients we would consider to be vulnerable apart from being in debt. They have mental and physical health difficulties, facing repossession, that sort of thing, risk of losing their fuel supply. So quite a challenging range of clients to deal with, really. Citizens Advice in Leeds serves the whole city. We offer a generalist service, and we've been around for 80 years, which feels like quite an achievement. Last year we helped 33,000 people with about 68,000 issues, and 12,000 of those were debt related. A lot were relating to council tax and also to fuel debt. We offer drop-in service, appointments, web chat, email and phone. So quite a wide range of ways for people to get in touch with us. But as I say, most of our money advice is face-to-face. And like all Citizens Advice, we are a charity and we belong to the National Association. So that's a bit from me really about where I am and what I do. Thank you.
Thank you, that's great. Muna, same question, please.
Thank you, Mason. Hello everyone, I'm Muna Yassin, Managing Director of Fair Money Advice. We provide debt advice and financial education services, and our parent company is Fair Finance. I first joined Fair Finance in 2001 as a debt advisor, very similar to Marilyn. We provide access to emergency advice via face-to-face services. And originally we were under the banner of the Money Matters project under Fair Finance. And in 2010, we created the charity vehicle Fair Money Advice to deliver and focus on the financial education and debt advice services for Fair Finance. We cover East and Southeast London boroughs, and we primarily work face-to-face with around 3,000 clients a year. And we also deliver telephone advice and financial education workshops. A lot of our work has started to migrate to digital channels over the last few years. Our kind of strategy has been to take our clients with us, because we work with lots of people who are very low skilled and in terms of digital, but also have difficulty accessing the tech. And so it's about making sure that we take our clients on that journey through the digital process with us. Last year we handled over £5 million worth of debt. We have a team of 5 advisors, and we provide access to not just information and guidance, but all the way through to debt relief orders and bankruptcy services. So it's a very specialist technical team, and we work with other organisations to help link in other areas of advice like housing, income and benefit support as well. So that's us in a nutshell.
Thank you very much. Same question, Matt. Hi, please, if you can introduce yourself.
Yes, good afternoon. So my name is Matt. I head up the Debt Free London Partnership. It's the Money and Pension Service funded regional body that provides free debt advice to over 24,000 Londoners each year. We are made up of 20 organisations in the partnership, led by Toynbee Hall, but also delighted to have fair money advice amongst the other 19 partners within our partnership. As has already been mentioned, we see a significant number of people that have got council tax and rent arrears. They're the two highest. That makes up over 2/3 of the debts that people come to us with. And we play an interesting role because we both deliver debt advice directly ourselves, and we also have a role in making sure that the quality of debt advice across London continues to improve. And we have a role in sharing best practice and learning from all of our 20 partners amongst each other. As kind of Muna touched on there, we've made an interesting and very rapid transition. Historically, the Toynbee Hall has led the partnership since 2006, and we've been commissioned by variations of the Money and Pension Service for face-to-face advice. So we're here to help arguably the most vulnerable clients in London that wouldn't necessarily benefit from either telephone or web chat because they can't access that. That digital divide is quite challenging for those clients. However, we've had to make digital services available and support clients to access those as COVID has hit and lockdown has started. So hopefully I'll have something interesting to share on what we've learned or initial learnings in our first 7 weeks of doing that today.
Excellent, thank you. And last but not least, Paul, I guess same question, if you introduce yourself and just...
Yeah, thanks, Mason. Good afternoon, everybody. So I'm Paul Bowden. I'm a partner with Wilkin Chapman. We're solicitors and insolvency practitioners. We generally tend to cover the whole area in terms of collections. We sit on around 30,000 matters at any one time. My niche area is looking after our firm's local government work. So that's quite a narrow area. The reason for my involvement with a lot of the current debt advice arena is I see a lot of kind of negative engagement between local authorities and debt advice organisations. Our cases that we look at tend to be about 10% of the population. They tend to be people with assets. They tend to be people who have quite a lot of equity, few creditors usually, and they're generally not the customers that would end up needing debt advice from the debt advice sector. But that said, there's massive work that could be done for the 90% in terms of trying to help people move through debt problems. As Mason said at the outset, I'm really keen to try and build this positive interaction because I think there's a lot of work that could be done, and that's something that I'm always happy to hear from people within the debt advice sector to see whether we can work things forward. We're doing quite a lot of work at the minute through MALD, through Friday Forum and other areas of that type of work, and I'm daily now getting contact from debt advisors asking for trying to put collaborative projects together with particular local authorities to see if we can put some projects in place and change the way that we're working.
Oh, that's fantastic. And so, I mean, from our panel, I think we have a lot of expertise from this, including, you know, we've got Paul who's representing the creditors, and I'm really excited. So without further ado, let's just jump right into it. So the first question, I guess, is for Marilyn, and it's about how has, from your perspective, debt advice evolved over the past 5 years? I know you talked a little bit about, you know, the background, but it would be good to see and hear from you in terms of what you've seen change over the last 5 years.
Yeah, I mean, it has been quite significant, really. I suppose it's not so much the debt advice process, it's what we're seeing in the way of what clients are presenting with. So now we have most of our clients presenting with priority debts. They haven't got enough money to live on. And that's why there's such a huge rise in the need for food banks, because we've seen the cutback in the welfare state. The safety net is really no longer there. And so we've got many more people who haven't got enough income to live on, and they've in fact got a deficit budget. So when you've got people in that situation, when you're trying to look for debt solutions, it's much more difficult. Because although some people will be helped by doing a debt relief order or bankruptcy, a lot of people will not, and they're kind of left in limbo. because they haven't got money to offer to anybody. They haven't got actually enough money to live on. And I mean, it's interesting what's happening with COVID, because there's been some changes to the benefit system for the better, really. But on the whole, we've still got a huge divide between people who've got enough money to live on and people who haven't. And that goes for people who are working and not working, really. So things like the benefit cap and the true trial limit, they all have an enormous impact on whether people feel that they're okay in their lives. I suppose on the creditor side, I think in the last 5, possibly longer years, we've got better behavior. There's the FCA have required them to treat customers fairly, to do much more in the way of affordability checks. There's the interest rate cap. We've seen the decline of the payday lenders. We're hoping that not everybody's gone to loan sharks. So there's been progress in that. But I think even for the credit industry, there's what do we do with people who haven't got enough money to pay anybody other than just to live on. There's a whole raft of people who can't make any offers at all, certainly for their non-priority debts, whether they can even for their priority ones. So the other thing I suppose that's happened is that we've got a standard financial statement, which is generally accepted across the industry, and that's good. But I think what we're seeing is more complex situations for people with no real debt solution possible. And that feels a difficult place for everybody to be in, really. I think the funding model for MAPS is also a challenge, the Money and Pension Service, because we're expected to see, a particular number of new clients in a year. But you've got clients who need a lot of support, really, especially the people that we see. So, you're constantly up against, how much can you do for this particular person? And can you get them to some sort of good place, which might be debt solution, or it may just be in a holding pattern, really. So yeah, it is a challenging place to be in debt at the moment, and I think, and it has been for the last really 5 years since the impact of austerity. And going forward, yeah, there is a bit of a light, but there's also going to be a huge demand for debt advice as we go forward.
Yeah, no, thank you. Just for the audience, just to clarify a couple of terms you mentioned, if you could just elaborate on deficit, budget mentioned, and priority versus non-priority debts.
Okay, so deficit budget is when you haven't got enough money for your normal outgoings. So your rent, council tax, gas, electric, water, travel, phone, food, clothing. You haven't got enough money coming in to cover all those. And generally people are making use of food banks to get food, really. That's where the crisis is. And that's a very sad indictment of our society, I think, that we've got people in that situation. And then priority debts, non-priority debts, that's to do with how debt recovery is enforced. So priority are much stronger measures that can be taken by a creditor to actually enforce the debt. So if you don't pay your rent, you're likely to lose your property. If you don't pay your council tax, ultimately you could go to prison, although there's been a lot of pushback on that. And if you don't pay your fuel, you can be disconnected. So those are priority debts. Non-priority debts are things like bank accounts, loans, overdrafts, credit cards, payday loans, that the creditor needs to go through the court system in order to enforce the debt and to get the money back. Does that help?
Yeah, thank you.
Okay.
So this question is for Muna. Could you elaborate on, we talk about quality of debt advice and engagement. If you could explain a little bit and talk about that.
Yeah, thank you, Mason. So Matt referenced it in his introduction. So Over the last 5 to 6 years, a lot of work has been done in improving the quality of debt advice. And that's primarily because you mentioned at the beginning the fact that debt advice is a regulated activity. So that regulation started in 2014. The FCA took over from the Office of Fair Trading, and what that does mean is that there are required standards that the advice that is given have to meet. And that's driven up quality as a result of that. And what it has also done is brought a professionalism to the sector. So advisors now have a certain criteria of CPD that they need to meet. They also have a set clear pathway of what their training looks like and what they're expected in terms of knowledge to refresh on a yearly basis. There are some exceptions from the regulation that comes from the FCA, solicitors, for example, and also local authorities. But what it has done is it's driven consistency of advice. So it doesn't matter if you're in Leeds or if you're in London, if you're getting debt advice, it means that there is a minimum standard of expectation. What it's also done and had a byproduct of doing is actually driving out bad practice in the sector. So a lot of the kind of heavy regulation that the FCA focused on at the beginning was to really focus on some of the bad practices in the commercial debt advice space. So the ability to take payments from people and use that against fees rather than paying off their debts, for example. So what that has done is driven out a lot of bad players in the sector as well. I think one of the things that it does around engagement for clients, from a client perspective, is it actually gives a level of authentication to the advice that's been given, and it gives a level of trust as well. So it allows people to be able to really trust the advice that's been given, but also ensures that there is less bad advice that's available. So lots of community organisations who were very well-meaning and who were working on a basis of providing advice and information and not really understanding how far that advice was going. There's a clear demarcation now between what's guidance and what's information and what's regulated advice, which means that clients are aware that when they go and see an advisor that they are in a regulated space and that there are parameters around that as well. I think it's also around, from a client perspective, it means that they are able to know that the advice that they're given has some accountability with it. So if there is bad advice that's given, there is somewhere that they can go to and complain. There is somewhere that they can also seek redress from advice, because it's catastrophic for a client's individual circumstances if that bad advice is given, and obviously are no comebacks for that agency, which a lot of practice was happening. I also think there's something to be said around sometimes when regulation goes too far. And so a lot of the work that we've done over the last 3 years around the schemes that have been introduced from the Money Advice and Pension Service, kind of peer-to-peer review service, we've been working with our partners and our funders to really make sure that that actually meets the requirements of making sure that there's best practice in the advice that's given, but also isn't a hindrance in the advice and the engagement with clients. So making sure that advisors are spending the time on actually delivering the advice to clients, as opposed to tick box exercises where they're meeting regulation on a kind of regulation base or compliance base. So really finding that balance. So we feel that we're starting to get to that point, and some of that work has been done with Debt Free London and Matt. And so technical supervision now is kind of carried out by Debt Free London, as opposed to an external organisation that didn't really know the sector. So a lot of that work has really been driven through the learning experiences of organisations that are delivering debt advice on the ground.
Wow, fantastic. And I think that's perfect segue for Matt as well, because, you know, the question I had for you, Matt, was you're in a unique position in working with partners across London. And I guess just an insight into that would be really helpful.
Yeah, so there's a real opportunity when you're operating at scale, and as I said, across our partnership, we're here to support just over 24,000 people a year. So that equates to 97 advisors, which we're here to draw best practice from, share that best practice, and make sure, as Mina's mentioned quite rightly, quality goes and continues to go in the right direction. Looking at how we can influence the digital infrastructure across our partnership, which I think is really important, because we've been able to operate in that partnership approach. We were very quickly able to deploy both a web chat service and a WhatsApp business service using our free phone numbers within a few days since lockdown started. and that's been really key for those people that could know where to find us physically, but might not have been able to know how to access digitally before, and making sure that we have multiple different channels in which they, in a way that they are used to and are comfortable with. So WhatsApp was really key for us for deploying that quite quickly, because they might come through that channel, but then end up having a phone conversation as a result. I think look into the future. A product of which we're about to deploy in the next few weeks is all around how they can use a digital platform to access open banking and have that product automatically make their income and expenditure statement, should that client have online banking, and also have access to their online credit reference straight away, a process which for many of our advisors and many appointments often takes 2 or 3 kind of traditional appointments to get done and get right. Now, we openly acknowledge that this won't be the correct solution or the correct stepping stone for all of our clients that come through and see our service, but if it can even help 20 or 30% of those clients, that will really free up advisor time to focus on what's important, which is solving or helping the client navigate that debt. And just in terms of the demographics, because we've seen some interesting results coming in the last few weeks. So in April this year, we saw the average age of a debt client shift by 3 years, so they were 3 years younger than they were the same time last year. Now that doesn't sound a lot, but it is significant because that number only fluctuated by 1.6 years in the last 5 years. So in essence, we saw a 21% increase in those aged under 30 access our service since COVID has hit, and we expect that number to increase. And if we reflect back on our London partnership, as I said at the beginning, the partnership started in 2006, which I often refer to as, as the year before the iPhone started. And if we think about consumers' lives and how much they've changed since the iPhone became about and all the different services and products that they can access now, we need to modernise our service to make sure it's matching the same high quality service they can expect from others. Now, that's not saying, and it would be wrong to say that we should replace a face-to-face offer with a digital offer. I completely disagree with that point, and that's not the point I'm making at all. But we can definitely use digital products to enhance a face-to-face advice. So, and there's 2 points I want to make on that. So firstly, you can totally see a client that can't sleep at night because they're worried about their debts. They haven't told their family about the situation that they're in. So it would be inappropriate for them to make a phone call. They wouldn't feel comfortable about making a phone call at that point, but they might feel comfortable having a web chat conversation at 2, 3 o'clock in the morning. And if they can get some reassurance that someone's going to call them back the next day at a time that suits them, that would be the first step in able to get a half decent night's sleep that night. If a telephone advisor then rings them back and talks them through some of the steps, they get some more reassurance. But it might be for that client that they've got lots of letters that they don't necessarily understand. So they do need to make a face-to-face appointment and come in. But when they come in for that face-to-face advice, just like you would with Amazon or John Lewis or any other good kind of retailer or service, that advisor that's seeing you face-to-face can see the conversation that you've had before, can see the notes, it isn't starting from the beginning. So again, you're getting that reassurance that you're going to get helped, and you do that. You might be able to use a digital product in that face-to-face, as I said, use online banking or open banking to produce your kind of quite quickly your income and expenditure for a period of time, and use an online credit referencing to pull down not just the debt that you're presenting with initially, but all the other debts which a client might not be focused on because they're so worried about this particular, one debt. And in a few weeks' time, that client might receive another letter that, again, they're not quite sure about. But rather than requiring a face-to-face appointment, they get the reassurance from a telephone phone call, because again, the advisor on the phone can see all the notes and everything that was discussed before. Now that there is a truly omni-channel service, and when we put the client at the centre of our service design, is a real evolution of our service in London, is the direction in which we're travelling in. But that isn't replacing one channel with another. It's about all the channels complement each other in a seamless offering, and making sure that there are digital technologies that enhance what we've always done, which is help people navigate their own finances and give them the empowerment to take control, which for so many of our clients, they just feel out of control when they first meet us.
Yeah, no, absolutely. Thank you. Just going over to Paul. And I think, Paul, because you represent councils, and we just heard pretty much from all of you about council tax being one of the biggest challenges as priority debt for people. It's important to, I guess, understand a creditor's perspective, because you represent some of these councils. When do you get involved? What do you feel is the current state of debt advice sector, I guess, and then what should people expect?
Yeah, I think it's important when we're talking about creditors and talking about councils. I think the two should be kept separate, because I don't think a council is kind of in the same category as other creditors. Councils can't pick their customers. Councils often have a situation where someone existing within their area triggers a liability, and there's all sorts of issues around the benefit system, particularly for council tax, that in my view is causing a lot of the issues now. So when I first started 10 years ago with Wilkin Chapman, for example, we had full council tax benefit, and a large number of people were fully exempt from paying council tax. Now they're not. They're on a council tax reduction scheme, and that's something that each council picks what percentage reduction is applicable to that customer. And what that means is that a lot more people are coming through a revenues team at the council that historically would have been exempt and off the radar. And these are the people that, like Marilyn was talking about earlier, they've generally not got the money to be paying their debts. So, I mean, if I could change one thing personally about council tax, I'd go back to CTB. And I'd get those people off the radar, because what's happening is people are going through a collection cycle because there's no resource generally at the council to do anything else. So historically, nothing to pay, not on the revenues radar, no issue in terms of enforcement. They're now coming through the system, and activities happening primarily through enforcement agents. And at that point, it's triggering activity, and it's obviously something that's causing widespread issues. The other thing that I've noticed really in the last probably 10 years is that when I first started, it was quite common for somebody to be able to go into a council building and talk about their debt and be signposted, or if not there and then passed on to someone to give them some debt advice. And now there seems to be a huge hole in terms of particularly because of austerity, there's just not that advice always there. So you can also often struggle to go physically to the council because there is no building there either. So I think that from a putting the arm around someone and helping them through an advice process, opportunities have been taken away over the years, and it's now reliant on the individual taking that first step, which is a difficult step to seek that advice. So I think there's all sorts of things that could be changed in terms of the system. Some of the advisors I've been working with, for example, we're looking at whether we can integrate advice into a liability order process, pre-enforcement, and whether there's opportunities there to stop people going through an enforcement process where clearly it's not appropriate. But the big problem is that often we're reliant on the customer engaging, providing their information, and that getting in front of the right person at the council to be able to make a decision about that customer. And that sometimes is nigh on impossible.
Yeah, thank you very much. I think what I want to do is just steer this conversation slightly towards the digital as well, and the benefits of digital. I know Matt touched on this as well. Just coming to Muna, talking about digital channels. I guess it would be really good to understand from your customer's perspective, like which channels do they use? I know Matt was talking about omni-channel approach as well. Do you have an omni-channel approach, and what benefits do you see from the digital channels?
So this is a journey that we've started with our clients, and really COVID has kind of increased and rapidly we've had to adapt as the situation has changed. We're lucky that we're part of Fair Finance, who have a lending company, a responsible lending company, that have access to lots of kind of tech and analytics and digital tools. We've started looking at open banking data for our clients and the ability to be able to draw down bank statements. The difficulty with that is, and I think some of the questions that have been put in the Q&A also relate to this, is actually how realistic is it for our client groups to be able to engage with those digital products? So, for example, you need online banking to be able to access the open banking data. You also need to be aware of your ability to use that and protect that data. And some clients are very wary about tech companies and people having access to their financial information. But in terms of speeding up our work and the way that we work with clients, the ability to draw down bank statements makes the process for verifying income and being able to put together a common financial statement so much quicker, because you have the data at source. Also, a lot of times clients aren't aware what they're actually spending and what their spending looks like and what's going out of their bank accounts. And it's also a learning tool. So when a client comes into our offices and the advisors sit down and go through those bank statements physically, they're able to start identifying areas that clients can reduce their spending, make savings in their current expenditure. And for us, I think if we're able to do that digitally, smarter, faster, I think what we provide to clients as a tool to take away will mean that it's that much more something that they can refer back to, and it's not just a physical and a kind of face-to-face conversation. So we're very excited about being able to use that open banking data to also increase our kind of education work beyond the advice process. We also use WhatsApp as a way for clients to engage with us and send us documents. So one of the things that I think this crisis has highlighted is actually what some of those inequalities are around health, socioeconomic, but also digital access and the digital literacy side. So a lot of our clients aren't able to scan in documents. So we've just started using things like WeTransfer that allow people to convert a photo into a document and then be able to scan that through. We're also looking at WhatsApp possibilities to do that. But what it does do for us is allow us to enhance security. So it ensures that there aren't very sensitive documents being sent by post if a client's not able to drop it off. So it's much more secure. It also speeds up the process for clients. But I think it's also about the position of the offer. So if people are engaging with retailers and other services online, the quicker that we can get some of our services and our kind of advice services around debt advice online, I think the quicker we normalise debt. So the subject today is, how do we break down the taboo of debt advice, digital debt advice? So debt has a taboo attached to it anyway. So I think the more that we can normalise it and we can actually put it as a suite of services that people engage with, either through booking a taxi or being able to order a kind of delivery, but also being able to access bite-sized advice and bits that are relevant to them, I think it will increase engagement, and I think it will start to break down some of those barriers around the taboo that's associated with debt as well.
Wow, that's excellent. Yeah, absolutely. And I guess you know what Matt was saying and what you were saying as well, Muna, was around, you know, the human element of the digital channel. And I just want to come to Marilyn and speak about that, and just understand, like, what do you feel are the human elements or human aspects of debt advice that we need to ensure are available in the digital channels?
Yeah, it's really important because people don't talk about debt. It is absolutely a taboo subject, digital or not. People don't talk about their spending, and actually to open up to somebody is a huge step for a person to take. And so you have to build up that trust. And I'm absolutely with Matt along the lines of actually, you know, a bit of digital stuff first of all, and then maybe getting to face-to-face. But our project at the moment is about face-to-face from the start, really, which is quite a step for people. But if they do make that step, and usually they make that step when they've had a crisis, in that they've, you know, got a really frightening letter or they're risking possession, you know, then they will take that step and get advice. And when you get them in front of you, that's when you build up the trust, because you have to ask an awful lot of probing questions really about how people spend their money, and that's very personal, and you might be the first person that they've ever talked to about that. And often having done it and produced a financial statement, and however bad it is, they will say how much better they feel, because A, they've shared it, and B, they're sort of being taken on a journey really as to how to get through it. So it is how you build up that trust that is absolutely key. And I think that is a real challenge for digital. And I think that's why there's got to be a mix really around, maybe getting people in through digital, but still doing face-to-face. So yeah, that's where I am on that. It's absolutely about trust. We've seen people being pushed down the road of digital for universal credit claims. And as Muna was saying, they struggle with passwords and logins and all that. And for some clients, it is just not suitable. And we have to be offering a service to those people as well as to people who are tech savvy. There's got to be that range.
Yeah, thank you. And I think, Marilyn, what you touched on about trust, and I just want to bring this back to Matt. And Matt, you were talking about the omni-channel process and the complement of the service. And I guess, the point that Marilyn is making is about trust within the digital channel. And just thinking about the example you were giving of a person who is, just waiting at night and worried about his debt, is able to contact someone and set up an appointment. But how can you bring trust in a digital channel? And I think that's one of the questions, if you can elaborate on.
So one of the things we're currently working on, I said it's our response to COVID, is we're working on having all of our advisors have a short profile on the Debt Free London website, which before making an appointment, their email confirmation of the appointment would have a link to their profile, which should absolutely talk about their experience and their background and have a little picture, but also talk about them as individuals. And working kind of in the third sector and also in the debt advice sector, why are they passionate about helping other people and what brought them? Many of our advisors are really involved in kind of grassroots other organisations in their local community too. And if you put all that together and have kind of have that as a bio or a short picture, it will never replace the same relationship you build up in that first face-to-face appointment, but it starts to build up an extra element of trust, which you wouldn't necessarily get if you're just ringing up a telephone call centre. You don't know who you're going to get if you can start to see and understand and before the appointment. So that's one of the ways in which we're helping to do that. In future, that might evolve into a short video profile. So you can see a bit more, and it's kind of an evolution if you go back to what many advisors already have on LinkedIn. Many, if not the majority of advisors, do have a LinkedIn profile, have some kind of social presence somewhere. It's how we can help support them to manage what is the right professional level of public information that allows clients to feel connected and understand who they are and why this is the right service for them. And as I said, it's something we're doing in response to COVID, and we hope to have that on our website live. So the elements that we'll draw is their experience and their hobbies and interests, and where they would usually give debt advice as kind of the first bit outside the traditional, rather than just saying, I've got 10 years experience in debt advice and these are the areas of debt advice I cover. I think it's important, and we think it's important to have a bit more rounding to understand who you are.
Yeah, wow, that's absolutely spot on. And just want to bring in Paul into this conversation about the digital connectivity. And I guess, I think you touched on it a little bit from a creditor's point of view, to be part of that equation as well in the conversation, and that there is a growing divide. How can digital overcome that divide?
Well, I think the creditors would benefit in the same way that everybody else would benefit in terms of the overall benefits of going digital. From a creditor perspective, it's absolutely great when someone can get quick and sound advice. So it makes our job much easier knowing that somebody's properly advised. We are happy with what information that we've been given, and a big thing, for example, is quick access to advice. So we quite often have cases on hold waiting for someone to be able to get some advice. So it might be that digital helps them get advice quicker through a different channel. I think it's absolutely right to have balance, because it's not about replacing face-to-face. It's about being smarter with the options that we've got for the circumstances that we're dealing with. So transparency, efficiency, all the things that we'd expect to happen for the customer and the advisor, you'd like to think would mirror for the creditor as well. Information storing, avoiding errors, duplicating information, improved accessibility. All these things will help in terms of meaningful engagement between creditor and customer.
Oh, thank you. So Paul, just while you're here, what with COVID-19 and the changes that we've seen with home working and staying at home, etc., what changes have you seen in the digital engagement?
Well, I think it's probably fair to say that going digital over the last few weeks has meant that the wheels haven't fallen off. And if we hadn't had the option to go digital, then we really would have had quite significant issues in terms of keeping things moving. So it's quite ironic that a lot of the things that were concerned pre-COVID in terms of security and those types of things have now been shelved because we're in unprecedented times. What it has done though is it's forced a lot of us to go that way. And I think that's something that we need to embrace now that we're in that world. We need to get around the kind of compliance and risk type issues that might be there with the forums that we're using, but we need to embrace them and move forward now that we've made, in my view, the hardest step because we've started using them more. It's just all about embracing that and moving it forward now for me.
Oh, absolutely. I guess same question to Marilyn.
Yeah, I suppose it's been quite a period really, because we've been a face-to-face service. That's what's been required of us, and we have now moved it all to telephone. And we always had a telephone service for the generalist, but not for debt. Well, we did some debt, but not much. So now it's all gone to phone, and it's gone surprisingly smoothly. I think what we're seeing with COVID-19 is that there is a bit of a drop in demand. I think people have got too many other things to think about their debt stuff. They're not sure whether they're in work, out of work, furloughed. Should they claim UC? Should they, not? Are they on tax credits? And less about the debt. Although obviously there's a lot of people going to food banks because they haven't got money, but they perhaps haven't realised that debt advice would help them. And we would certainly put out a plea that people do come for debt advice, because even if they don't think they've got debt, they will have. And, we can help them with some sort of prevention, even at this stage. I think it's more about headspace for them at the moment, because there's too much other stuff going on. Also, people on benefits, as I think I mentioned earlier, are that bit better off, really. There has been an increase of £20 a week for people on UC and tax credit. So for the people that are on benefits, that's a big increase. And also there's less deductions happening. So, they've got more money in their pocket, which is great. There's still huge challenges about rent and council tax, but there again, there's forbearance on those. So yeah, we've moved to phone. We're seeing slightly less people, but we expect it to be hugely busy as time goes on.
Well, thank you. And I guess Muna, same impact on because of COVID-19.
I'd agree with both Paul and Marilyn's assessment, to be honest. I think there has been less of a bandwidth for people to think about their debts at this stage. I also think other issues that are more precedent have taken over, so like health, safety, security, family. But I also think a lot of the forbearance that the banks have applied, some of the payment holidays, has meant that people actually can focus on the things that are important to them now. I expect demand to go up once those kind of schemes are wound up. And also as people start to really understand what their employment situation is. There's lots of worry around people who are furloughed, if their jobs will be still there once the furlough scheme is finished. I also think it's really highlighted some of the inequalities that we've been talking about earlier. So the fact that you have some groups that are more affected by this crisis, so BAME communities, people who are working in 0-hour type employment, and people who are key workers. So what's been kind of tragic for us to witness is a lot of the kind of really people that are affected by this crisis are our client groups. They are the people that seek advice from us on a daily basis. They are the people that we work with around getting their finances sorted. So people who are nurses, people who are security guards, all of the kind of key groups that you can list, we work with on a daily basis. And so it's been heartbreaking to see that. I think what's been interesting also is to see how the crisis has actually pushed people together. So all of the kind of things that people worried about, like data security and compliance, have all fallen to the wayside as people have responded as needed. But I also think it's really brought out some of the kind of community connections that are needed on the ground to really be able to push through some of those solutions long term. So people like the mutual aid groups that have supported us to get emergency needs out to some of our client groups in this space. So, for example, we had a client who was 80 years old, was sofa surfing for a good 5 years, had been given a home and had no bed, no bedding, and was destined to be that way for the next 3 months through this crisis. We were able to access a mutual aid group who were able to provide a bed within 24 hours, bedding, and we're also able to ensure that there was access to hot meals 3 times a week. So that collaboration and that spirit of collaboration, I think, is really important to capture and keep going. I also think a lot of the smaller organisations need some support around some of that pivoting to digital services and being able to continue some of the kind of changes that they've applied now to take that forward. And people like Debt Free London and ourselves, who are some of the larger delivery organisations in the space and have access to some of that tech and expertise, are more than willing to be able to support and help them do that transition. But I also think it's important for clients to understand that actually this is not just a short-term issue. I think it's about understanding how you build financial resilience, because crises come and go. And it will affect people. Again, it's about how we build resilience within our communities and ensure that people are much more financially resilient as part of that process.
Absolutely. Wow. Moving to Matt, you touched on the COVID-19 response that you guys have done, but I guess if you can elaborate on that as well in terms of your strategy and what you're thinking about going forward.
Yeah, and I think I'd go slightly further than some of the other speakers. So across our partnership, we've seen a 65% reduction in the number of new clients coming to us in April compared to the same time last year. And you know, to echo points already made, we're expecting a massive avalanche as soon as the furlough scheme stops and other initiatives kind of all dry up, which is really worrying. I think just in terms of some very early modelling, I think we are currently predicting that peak demand for debt advice will be in around 12 to 18 months time, and we expect it to be 200 or 300% what it was before COVID, and that to be the new norm. Which is really worrying when we think of the repercussions. You know, we currently fund 97 advisors. How would I attract, train and deploy an extra 200 advisors, and how would I seek to the Money and Pension Service and others to help funds and support that is a big question there. In essence, one of the things that we did way before COVID, which has proved really beneficial for our current working environment, is we moved to a single client management system. So previously, as a funder, we never prescribed a single system and we allowed partners to use their own. So there was 11 in use across our partnership. By moving to a single common platform ahead of knowing anything about lockdown and COVID, it has allowed us 2 quite big advantages. Firstly, or both actually in relation to quality, but firstly, in terms of our technical supervisors, they are now able to remotely view the ins and outs of every case and provide feedback on a regular basis remotely, which previous to that, having paper files and, you know, as convenient as uploading things into a Dropbox or secure WeTransfer, that's still more clumsy than just being able to have access across multiple organisations. So that's been a really big advantage. And the second one is the deployment of our templates, checklists and standard paragraphs. And our CMS allows people to kind of almost click a button and insert these standard paragraphs into their letters. So the advantage of this in terms of working in a partnership, when we see best practice in one area, we can very quickly replicate that across all agencies within our partnership overnight. And being able to be that agile as we've entered lockdown means that you know, as advice and guidance has changed quite every 3 minutes, it feels like some days, we're able to update our CMS, so advisors are always able to offer the most up-to-date advice and do that. So that's been a big benefit to us too.
Yeah, no, that's extremely encouraging. I think because we're here talking about breaking the taboo, I just want to talk about people who are worried about seeking debt advice. And I guess just going to Marilyn first, can you talk us through a typical debt advice process, just so that people can understand what they would go through? And just talk, you know, just if you could give some comfort around the process itself.
Okay. Yeah, I mean, I think people who do debt advice genuinely want to help people. They're not really, and they're not there to make judgments about people. And I think if we could get that message across, that's really important. We're not going to be saying you shouldn't be paying this, or you shouldn't have done that, or you shouldn't have done this. That's not how we operate. We just need to explore what their full situation is. So that's why we need to build up trust with them, so we do get the full picture, because we can't advise on debt solutions unless we have a full exploration. We do a full financial statement, we find out about all the debts, and then we give them the information or advice that is relevant to their case. So, you know, what are the options? Can they do a debt relief order or bankruptcy? Should they do a debt management plan? Should they ask for write-off? Have they got assets? Could they do an IVA? All that range of solutions for people, and including, you know, if they've got mortgage possession or rent possession cases. So we cover all that and their options. And then we look at, you know, well, what do they want to do? Can they make the choice? Have they got solutions that they can follow? Are they going to actually do nothing for a while because that's the best thing, or that's all they can face? But throughout that process, we're empowering them with a lot of information and empowerment, really, for even if it isn't now, for later, so that they know there's a process. Because I think people are casting around when they're in debt and they don't know who to turn to. They don't know who to listen to. They might listen to their friend at the pub. They might listen to the creditor. They might say, oh, well, so-and-so told me to pay this person or to get a loan here. And what we're trying to do is educate them around the whole debt advice process and the money process to be in a better position going forward. So that's why I would say, yeah, seek debt advice. It really is the right thing to do.
Thank you. And I guess, Mona, same question, but, you know, if you could give some comfort to people, what would you say?
I would say everything that Marilyn said, but I would also add that advisors are your advocates, really, and for them to be able to kind of act on your instructions and act on your best interests in your behalf with your creditors when they are negotiating, they need to build a case. And to be able to build that case, they need you to provide information, but also to take on some of the actions that they ask you to do. So, for example, we ask clients to safeguard some of their income. We'll ask them to change their bank account. We will give them instructions around accessing different forms of income. And all of those things that we ask you to do are to help you get to the point where you have resolved your immediate debt crisis, and also put you on the kind of path to long-term financial resilience. I also think it's about coming back to that word taboo and having an honest conversation about what debt means. So the word debt has a connotation of shame, or you've done something wrong, or it's been your own fault. I also think we need to think about actually what debt and problem debt, the difference between debt and problem debt, and how we get that across, because we're a credit-based society. People are actively encouraged to take out credit as part of their normal day-to-day kind of financial activities. And in actual fact, if you want to increase your credit score and you want to increase your financial opportunities, you need to take out credit to be able to build that up. So it's about learning and working with people to really understand, actually, these are the things that you need to do within that financial world to be able to increase your financial resilience, and debt is part of that journey. It's about how you handle that debt. I also think that the debt advice process is really an opportunity around getting people to understand what their financial priorities are, and helping work that through with a professional, and being able to set financial goals that work for you. So it's not about fitting into a box that an academic says that you need to. It's about what fits into your lifestyle and what works for you, and how we can help you achieve that. And I think sometimes people think about the theory too much rather than the practical. And a lot of our clients, what they want to be able to do, like Matt said, is maybe have a good night's sleep, not worrying about their finances, or maybe they want to be able to take their child on a holiday. So how do you plan, depending on what the aspiration, that goal is for clients? But I would say as an overall, I think speaking to a debt advisor and seeking out that advice is the first step to taking control. So that first conversation is that first step for you to start to take control of your finances. And it's a journey that an advisor can help you through, but it's also a journey that you as an individual have to accept that you want to go through. And I think sometimes a lot of clients are sent to us via an action via a creditor. I think what we want to do is normalise and encourage people to seek advice themselves before there is a problem. Because the kind of psychological dynamic between being told to do something because you've done something wrong or you've not paid a bill or whatever the case may be is totally different to somebody who wants to actually start to take control around their finances themselves. So what I would say is that to encourage people to seek debt advice, I think we need to think about actually encouraging them to do it themselves as opposed to, you know, reaction from a creditor. And we really want to empower them to be able to do that and take control of their finances.
Thank you. Now, just coming over to Matt, and I think Matt, you spoke about you know about the system, and I think from your perspective, it would be really good to understand how can for example, we talked about seeking debt advice. The cost of it is much higher. People wait quite a long time as well. If you could just expand on that and maybe, you know, give some comfort to people in terms of, you know, why they should come in earlier. And
yeah, and I think just to, you know, it echoes some of the other points. We talked about the large number of people that are over indebted. So in London, the figure we're going is 1.6 million Londoners out of a population of 9 million. So it's actually really common. There was what was the Money Advice Service report out in 2017 around behavioural science and normalising that. And I think there's a lot of work that's still to be done in helping people understand that they're really not alone. Although they feel that there's a lot of judgment that could be put on them, especially if they, you know, share some of the information with their friends and family. Actually, for our advisors, this is so common. We see this in and out every day, and that we're here to support them. When we redesigned our website, when we launched the partnership as Debt Free London, we did quite a lot of work in trying to highlight the fact that, you know, if you're struggling with your rent payments, actually we helped 13,000 people in a similar situation as you last year. Here's a few quick steps that you can take that's going to help our advisors when you come and see us. So yeah, anything we can do to normalise the feeling that I'm not alone. Lots of people have the same situation, and these are the experts that can help me. And anything we can do, and building on what I said earlier around the advisor profiles, anything we can do to make our advisors feel like the normal people that they are. As Muna said, you know, they're experts, but they're on your side, and that they're not making a judgment. They're here to help you. And I think there's in our kind of key messages in our brand is that we're free advice, but we're also independent of anyone. We're not, you know, we might have been recommended by your housing association or by someone, but we are truly independent of them, and we're not going to place their interests above yours. And how we can get that message across to those people, to our clients, will be really important. I think as we look kind of to post-COVID, as we start our planning for that, there will be so many people needing our advice for the first time. People that never would have thought that they would need financial help at all. They've always had a job. They've, you know, generally they've had good savings for most of their life. But as furlough schemes start, and as they look like they're going to start to dry up around August-ish time, people will have to dip into their savings for the first time, and that pot of money that they've had for a rainy day isn't going to last very long. and we don't know what the economy is going to look like for 6 or 12 months after that. So there will be an increased number of people that have never had to seek advice. They will feel ashamed and embarrassed to seek that advice for the first time. So it's really important that we normalise that as much as possible and make ourselves open. And touching on making ourselves open, I've mentioned around omnichannel, and the reason for that is we have to make sure that however a client feels comfortable reaching out to us, we're ready to welcome them and to help them in a channel that suits them. If we reflect to how our partnership or how some of our service operated last year, I would say we had 55 locations across London that offered face-to-face debt advice. Some of them were only open for 3 hours a week on a Wednesday because they offered outreach locations. And I think I would be much more comfortable having fewer locations, but were open 7 days a week with 2 or 3 late night openings. We have to be, as good as John Lewis in terms of customer service and openness. And we have to think about that as we go back. It would be wrong to expect somebody that might be a carer for a child or a relative that's working all the hours that they can to meet their financial commitments, say, actually, we can only see you on a Friday, so please take Friday morning off. It's a drop-in session, so I can't guarantee you'll see someone, so just get there early. I think we can do so much better in 2020 and giving people reassurance along the way. However, having said that, that doesn't escape the point that we do expect demand for debt advice to significantly increase. I said earlier, our early modelling shows a 200 or 300% increase in the next 12 months. We do have to do more and seek to existing funders and potentially new funders in future to train additional debt advisors to help the influx that tragically we are going to see.
Yeah, absolutely. And I think just putting Paul into this conversation, from your perspective, I guess it's important to understand why and how creditors support debt advice. I know Matt and Mona were saying that debt advisors are independent and they are on your side. Why would a creditor support debt advice, and why and how do they do it?
Yeah, I touched on it earlier in terms of the real importance for creditors and their representatives for somebody to be getting good, sound, reasoned advice. Creditors have had a long history of customers approaching them having received tactical type advice, and tactical advice, in my view, often just trips up the customer in the longer term. It's getting much better, but there are still things on certain websites that tell people not to do this, don't do that. General things that actually hinder the process. But when engagement's meaningful and it's accurate in terms of the customer's situation, and there's a willingness to try and resolve, then of course creditors are and should be receptive to sorting out the problem. So I think the key is we need to be supporting good advisors as creditors in however way advisors think that's an option. The starting point is generally good collaboration for me. Getting that meaningful engagement off the ground first off. Somebody put a question on there about, and I've responded to it briefly, but about running awareness campaigns for councils about signposting to debt advice. The foundations need to be there to begin with for that creditor and the advisor as a relationship to be then making awareness more about it and signposting people and guiding them than something that's there. That the meaningful engagement needs to happen. We all know, we've all seen cases where someone's had some advice and you've kind of thought, well, where's that advice come from? Compared to a scenario where they've had advice and you think this person knows what they're talking about, they've owned the situation, they want it resolving and they're trying to sort it out. And that does influence how a creditor reacts to a scenario. So it's important that we work together is the bottom line for me, but it's also important that the advice that someone's getting is balanced, reasonable, sound advice, and it kind of points towards a solution that helps everybody.
Absolutely. Just for the benefit of the listeners, when you talked about tactical advice, do you mind elaborating on that?
Yeah, I mean, like I say, it's reducing, but we've all seen the websites that say don't open the door to the enforcement agent, they can't break in. If you don't engage with them, then they can't do anything. Now, okay, if that person's a homeowner and that's a local authority case, what's the chances of them going down the bankruptcy route or charging order for sale in 12 months' time? You know, that type of advice generally will trip up the customer later down the line, because they'll end up with something potentially much worse than, you know, they could have had before, or the scenario where the income and expenditure just doesn't stack up because it's not been thoroughly looked at, and you proposed a £1 a month payment when there's a £600 miscellaneous or whatever else it might be in terms of outgoings. You know, the creditor needs to see that the customer has made a good effort to give an accurate picture so that they can then make a decision on the back of that. So it like I say, it is reducing, but we are still seeing examples of kind of the old school tactics of keeping the creditor at bay. It's a bit like when we're thinking about breathing space and other things coming down the line. Used properly, they will be good. Abused, they will leave a bad taste. And it's about getting that balance right in terms of both sides of the equation.
Yeah, and I guess for people, it's important to engage with debt advisors earlier on to make sure that they have the right advice and the complete picture, so that the debt advisors can then engage with the creditors as well to make that happen. So I guess, Paul, just staying with you and just talking about, we're just going to shift into looking at how organization or how debt advice can be improved overall to overcome some of the challenges that we've talked about. What would you see as an ideal, from a creditor's perspective? How could we integrate them into the system, or using the digital channels that we have? What would that look like?
I think getting there quicker if we can, in terms of being able to reach out to the customers that are experiencing difficulties. So from a creditor perspective, it's often unknown that there's an issue until somebody comes on their behalf. So for example, there could be projects around looking at data use. So a creditor could look at data for a particular area, and they could identify a poverty household, for example. And they could have a project in place with a debt advice organisation where there's a signpost that instead of it going down an automatic enforcement process, it goes down another process, which is reaching out to that particular household to see if there's something that can be done. That's reliant on resource and meaningful engagement and interaction between the debt advice organisation and the creditor. It will only work for certain types of creditors, but that's a specific example of where more could be done earlier on. A lot of it is reactive, and it happens after court orders have been obtained or after liability orders have been obtained, after it's gone to an enforcement agent. And then sometimes it's too late, sometimes it's much worse. Sometimes that makes the customer not want to engage even more because they think it's more serious at that point. So earlier action for me would be a big improvement. In terms of there are obviously concerns around digital for me, and I think those concerns wouldn't be there if we keep the balance right in terms of the right cases for digital. Some people will love and thrive from it in terms of an option. Others, it would be the worst thing imaginable for them, and we need to make sure that people aren't slipping through gaps because they can't access debt advice because there isn't a way to do it that suits them. One big thing for me that's just as a thing I see quite often, I hear quite a lot that creditors shouldn't use enforcement agents generally as an option, but then the creditor is expected to pick up on vulnerability, and often, particularly for a council, it's the enforcement agent that is the only pair of eyes and ears for that customer on their doorstep trying to engage. And if we're going to pick up on vulnerability, then often that's an opportunity to do it. If we take that away, then we're then back to reliance on the customer flagging it as an issue to begin with. And often, in my view, customers are reluctant to flag up vulnerabilities and issues that they've got. So it's about bigger picture for me, and trying to strike the right balance in terms of protecting the customer's interests, but also protecting the creditor's position, because we've got to think about the bigger picture.
Thank you. And I guess coming to Muna, and I know you touched on, how advisors can use some of the digital channels to alleviate concerns that people have around debt advice. Just want to understand a little bit more from your perspective, like from an organizational perspective, how we can ensure people are more comfortable using digital channels, how organizations can set themselves up to use digital channels better as well.
Thank you, Mason. So I would probably look at it from two perspectives, one from the client perspective and one from the kind of organization perspective, and lumping in the creditor as part of that as well. So from a client perspective, I think it's really important for them to really feel like they're getting what they need. So the trust issue that was mentioned earlier. So for example, if somebody has used face-to-face advice before or has engaged with debt advice before in a different way, I think they really need to feel comfortable that whatever offer is available on the digital space actually captures all of the things that they've had before and have got used to, or they expect from a face-to-face environment. I think there's also issues around making sure that clients are not constantly repeating their story. So one of the things that we find really helps with using the kind of digital channels and collecting that data, and us being the conduit that speaks on their behalf or negotiates on their behalf, or we're able to put that story to the creditor. So I think it's important that we're able to identify ways that we can make that client's journey through the debt advice process easier for them, ensure that they are able to keep their dignity throughout the process. So there's the anonymity that Matt talked about, so ensuring that other people don't have access to their kind of data, that don't need to have access to that data. But also from an organization perspective, I think it's really important to not only allow the organization to provide a omni kind of channel service, but I think it's also to involve an omni approach depending on the client. So I think what we need to think about from a kind of organizational perspective is having the funding that allows us to provide the right approach depending on the client's circumstances and needs. So there will be clients who are younger, more used to using tech and digital services, and who don't have complex needs. So for example, they don't have priority debts. We're able to do things digitally with their kind of non-priority creditors, which is much more simple, but engaging with enforcement agents and local authorities and over council tax debts, that is a bit more of a challenge digitally than it would be with, say, a big bank or a big creditor. So really making sure that the tech works for the organization and it doesn't kind of hinder the advisor's ability to progress that client's case. So making that process really simple and seamless, I think, would be very important. From a creditor perspective, I think for them, that early engagement, the ability to know that somebody has sought advice, has got into the system, and that the advisors are able to kind of check off and say, look, please put a hold on this person has accessed the advice service. And so you can start that chain of conversation with the creditor, and they're able to double check and be able to see the progress of that case. But also it's an opportunity for the creditor to give us the information that we need to be able to progress that case on the client's behalf. So for example, access to credit agreements, access to any kind of enforcement action that's happened in the past, access to the key documentation that allows us to do our assessments. So we're able to come up with a presentation of a solution depending on that client's circumstances. So I think from all parties that have a stakeholder interest in this, I think it really is incumbent on all of us to work together to be able to develop something that works for all the different key stakeholders, but is also client-centric. Because if it's not client-centric, clients will not engage. And I think it has to be client-centric, but also ensure that all of the key parties involved have their basic requirements and needs also met.
Thank you. And just moving to Matt, I know you talked about before COVID, you looked at moving from 11 platforms into one, and that worked really well. And I guess question is, if I am a charity or if I am a debt advice agency that's looking to go digital, how would you go about the process of thinking about digitization of your services? How did you go through that mental process?
Just with the caveat that going from 11 CMSs to 1, although it was the right thing to do, didn't come without its challenges, nor its kind of learning curve as we went through that. I'm not quite sure if you asked our 97 advisors, they would say it was smooth and seamless, but it was the right thing to do by our clients. And I think that would be my approach to anyone seeking advice in terms of how do you digitise, or how do you consider what elements of your service do you digitise. I would always refer back to your clients and think of their experience, their entire client experience, and where does it make sense for you to invest your resources first. And that's where you should take your approach. Don't do what's right by your advisors. It's not their journey we're looking at here. We're looking at the clients. What's going to make their life easier to get the debt advice that they need at the end? Is it the kind of the entrance to your funnel? Is it the make sure we have as many channels open as possible so people can access us to begin with? So consider the WhatsApp, the web chat, the Skype, the other channels that you could consider there. Or is it the during process? Is it the making sure that whilst you're receiving debt advice, we can quickly understand what your current circumstances are, understand all the different debts, even if you're not presenting with them all, help you with your income? Where does it make sense? The client always has to sit at the center. Is it, if you're in a different part of your kind of service journey, is it actually investing in the quality of advice to make sure, irrespective of which advisor you're seen by, you'll continue to get the same level of quality and you can continue to improve and share that best practice across them? There's many different aspects of where digital can enhance, and I would say it's the wrong approach to try and tackle all of those at the beginning, which is why for us last year we focused on getting ready for a single CMS and kind of getting our back of house stuff in order. That's enabled us to now start to consider, okay, now we've got that, let's look at open banking, let's look at the web chat, the video chat, and in future, and kind of just touching, I can see one of the questions that's come in there around people that don't have access to a PC or smartphone. In future, how can we make digital service or digital offering open for those types of clients? So thinking specifically, I mean, I say in the future, but it will be during lockdown, we need to address this. Can we repurpose some of our traditional advice centres to be self-serve? So by that I mean, can you have kind of video chat pods, which are very easy to, so it feels the client that it's face to face, but it's a digital infrastructure behind that which connects them. So it's not relying on them to have the IT equipment or the tech know-how at home to do that, but we'll give them a place to come where they can access that in a safe way. And I think, in all honesty, we will have to address that through lockdown. But yeah.
Thanks. Thank you. I guess, Marilyn, just we'll spend 2 minutes on this, and I want to move on to the Q&A. So just wanted to understand from your perspective, given that you are mainly a face-to-face service, what are the key challenges and red flags you see moving into digital, and what would you consider post-COVID when you're looking at digitizing your services?
Yeah, thanks, Mason. I think one of the things that we've got to be really careful of, and I think the MAP strategy is influencing this a bit, is referrals from creditors, and Muna touched on this as well. I think creditors like people to be referred into debt advice. They can see that people want debt advice, or they can see that they need debt advice, but if the client isn't ready, then there's no point in it happening. And I think there is a danger that actually you could get more pressure to do that in the system that we currently have, really, that people will say, oh, you need to get debt advice. But if the person is not ready to get debt advice, it's never going to work. And we've had experience of that on quite a few projects where we just never fill the appointments, or if they do, they're just not engaging with it. So I think that is certainly a red flag for us. We would want to be really careful about how we get our clients, really. We get enough clients most of the time, and we're going to get a flood, but I don't think creditor channels are necessarily the answer. As for the digitalization, I think, yes, we do need to look at how we operate now that we're in this COVID state, really. It is so helpful to be able to see the client. We're already experiencing that telephone is not great at all. You can't see them, you can't see their papers, and we need to be cleverer at that. And I've been really heartened to hear some of the things that have been going on, especially in Debt Free London, about what you're doing, and also Muna's innovative stuff. So you know, I will take that away as, you know, maybe those are things we really need to consider in our service. But of course, we struggle with different channels, and to be able to offer something wider for everybody so that it does suit the individual. That will be where I'm coming from, the concern about that. Thank you.
Thank you. So just moving into Q&A from the audience, we've got a question from Darren. He's saying, doing work with the City Council on collecting council tax, we provide granular data from customer credit files, where we can see the customers are paying non-priority debts instead of engaging and paying their tax. Do the advice service lean on this data to deliver sound advice to their customers? We can see the vulnerability as massive, and we have to address these customers, which know the councils we work with embrace this approach. Can we get a clear message to customers to educate them from an advisory role with priority versus non-priority? So, Marilyn, do you mind answering this question?
We haven't actually, until very recently, had access to credit reports quite quickly. So I think now we could maybe offer more on this. But I mean, if somebody engages with us, then obviously this is what we're going to cover. It's the, you know, getting them to engage that's the problem, I think, which is what I just touched on. You know, this is a council that's desperate for the person to seek advice. Yes, if they come, we will definitely be talking about priority and non-priority debt and what people need to pay. But, you know, if they don't come, we're a bit stuck, really.
Yeah. And I can guess, Matt, this one is probably more up your street. It's saying, it's from Carolyn from Coventry Independent Advice Service. My organizations deal with a lot of people with no PC, smartphone, etc. Lots of digital options, which is great, but majority of our clients would be lost without face-to-face support. Current lockdown has demonstrated with this, with advisors working from home, trying to share documents, etc. Thoughts? Sorry, Matt, you're on mute.
Sorry, one of us was going to do it during the webinar, right? So 2 points. I've touched on both of them briefly previously. So firstly, when I speak about digital transformation, it's not just the channels in which it's delivered, it's how it enhances the entire journey. So I think how digital can help, as we've mentioned, the credit files, and also being able to quickly pull down your income and expenditure. It might be, you know, a first step might be helping a client to get online banking, to get more up-to-date information, and then do your income expenditure based on open banking protocols. Would be a good first step. The other one that I touched on is how, and it's a challenge that we will be facing, that COVID's helped us push up the agenda, but how you can have remote pods almost, where it is set up as a video session, which a volunteer could either log you into and you can sit down and be in front of an advisor, or that it's so simple, you just hit the start my advice session and it goes through there. It's all about how we can't expect our end client to own and understand how to use the technology, but we must be able to provide it for them and help them navigate that journey. It's how do we empower them to use technology rather than how do we expect them to have the technology to access our service, and where is that appropriate?
Thank you. We have a question from Anonymous saying, what are the ways digital product services can help advisors speed up their work and or increase the delivery efficiency? I think we've covered this more or less. So I'm going to skip to the next question, which is digital products is not about replacing face-to-face customer interaction, but it can be about helping the advisors their everyday work, generally with improving processes and efficiencies. Where do you think digital products can work in your organization? I think, Mona, you touched on this when you were talking about the different ways in which digital could be adopted. Do you want to just expand on that a little bit?
Yeah, I think we've all agreed that replacing face-to-face advice is not the goal. It's about actually how do we enhance all, so how do we attract different types of clients and give them a relevant platform and a relevant access to the advice that they want to seek. So I think it's about focusing on some of the efficiencies that obviously helps the advice process, but I also think we have to really consider if those efficiencies are appropriate to our client group. So for example, open banking is great from an advisor perspective, from an organization perspective, because we have access to all of the data that we need to make some kind of verified income and the common financial statement, standard financial statement that we need to focus on. But can our clients access that open banking ability themselves? Do they have online banking? Are they aware of how their data is used? Is it really ethical for us to kind of ask them to transition to this when they're not fully aware around digital literacy and what that data will be used for? So I think there is something before that. So I think there's lots of work happening because we have to do it because of COVID-19. But I also, and to be fair, there's been lots of movement within our client group because of COVID-19. So for example, lots of families are having to connect on Zoom and use technologies to stay connected. So can we piggyback off that process to actually use the technology, the advances that people have made to actually transition over to how they access key services as well? But I think we also have to address the elephant in the room, which is the universal credit and people's interactions with the universal credit and the move to online and how that has been perceived and impacted on in terms of some of the client groups that we work with. So really learning from the mistakes of the past, but also making sure that we're taking our clients with us on that journey. So what is the kind of bolt-on support that's required for people to increase their digital literacy, to be able to understand the kind of tech that we're using? And lastly, I would say that actually we're all focused on high-tech solutions. I think we also need to look at low-tech solutions for our client groups and ways that people feel that they can interact on a kind of bite-sized process. And as they start to increase their knowledge, they can start to increase their technology capacity as well. So looking at low-tech solutions as well, I think is very important.
Thank you. I guess this one is for Paul. It says, I'd be interested in Paul's view about willingness of councils to use Facebook or Twitter to run awareness campaigns around use of debt advice for people falling behind with their council tax or rents, etc. I know, Paul, you've written and answered that, but do you mind just speaking about it so that people who haven't seen the question?
Yeah, like I touched on that earlier with regards to one of the other questions. I think it's a good idea, but I think the foundations need to be there first. So there's no point putting something on Twitter or Facebook or wherever if there isn't a system in place to deal with that process. So for that to happen, for me, would need a project in place with a debt advice organisation and a particular council that we know works, where we identify the correct and appropriate opportunity to pass on. I know what Marilyn said earlier about referrals. It is difficult. For me, I had a question last week about where in the liability order process for council tax would be a good point to put advice. Pros and cons throughout that, but for me, I think the best would be at liability order court, because they're there and the advisor could be there, and that could be a way to start talking to people. But you know, these projects need thinking about, they need putting together, and then they need rolling out, is my view on that.
Thank you. There was a question about, does the panel expect a sharp rise in demand for debt advice post COVID-19? We answered that question. I think, Matt, you covered that very well. Does seeking debt advice impact one's credit score? So I know, Mona, you've written on it. Do you want to expand on that a little bit?
Yeah, so unfortunately, it can impact someone's credit score, and it depends on what their circumstances are. So if it's a short-term debt issue, we usually tend to support clients to do a self-help process, because that is an indication to creditors that it's a short-term issue and it's a short-term solution to it. Where there is intervention from a debt advisor, it usually tends to be for more of a long-term problem debt issue, and that will have an effect on people's credit scores. And it's not necessarily that the debt advisor has got involved, it's the fact that the issues are chronic as well.
Thank you. I guess There's a comment here from one of the questioners saying, thank you for Paul for showing how the enforcement agent plays a role in identifying vulnerability for local authorities when the customer doesn't engage with them directly, despite letters and calls. So that's a compliment.
Can I just come back on that, actually? Can I make
Yeah.
a comment on that comment?
Yeah,
and this is not to denigrate anything that Paul said, but I think it's also, we're talking about data and the responsible use of digital and how we enhance it to help clients who are in debt. So I think there's something around local authorities actually talking to each other within different departments and sharing that data. So for me, the fact that it would have to be a enforcement officer that finally recognises that somebody is vulnerable, I think is a very late stage. So ways that we can encourage local authorities to use the data that they have on their systems across different departments to be able to identify that vulnerability before they've actually sent out an enforcement agent, I think is something that we should really be able to do in 2020. And I think it's something that we should also be encouraging if compliance or data protection is some of the issues, the same way that we've been able to get around those during the COVID crisis. Actually, this is a very serious issue for people that are vulnerable, and we should be able to put those aside as well. So I think there are ways that we can do it. At the moment, it's just not being done.
Yeah, I agree with that, Moona. There is work that can be done. In my experience in the last 10 years, where it's very, very back end in terms of action, the most vulnerable cases I've dealt with were not known to adult social services at the council because that was checked before action started. They were literally unknown. So I have had cases that have gone all the way through to bankruptcy action, and it's only after probably 20-25 steps in a process that we find out that the customer lacks mental capacity. So there are often times where it's not known and it's not on the radar because in my view, the most vulnerable people often don't know where to go to ask for that help to begin with. So it is getting the balance right. The information sharing side of things is often an issue because it might be the same council, but it's often on a different computer system. And that's another area where digitalisation and systems could really help things, because you might have 6 different departments collecting council debts with 6 different computer systems that don't talk to each other. So, you know, there's all sorts of hurdles. They're not insurmountable, but there are challenges that can't be overcome at the switch of a button.
No, agreed.
So thank you very much. I think just for closing remarks, first of all, I just want to thank all of my guests, Marilyn, Mona, Matt, Paul. Thank you for a very, very exciting and insightful discussion. I think what we've really learned is that, you know, first of all, we do live in a indebted society where debt is everywhere. We are also going to see an increase in debt advice post COVID-19. And from COVID, we've seen that people have moved to digital and accepted digital. But I think there's still a lot of work that needs to be done in making not just the debt advice, but also the entire process from creditor, debt advisor, consumer to be most effective so that people can really benefit from it. I think we've identified there are a few gaps there, but there are still good solutions out there we can still adapt. Making sure digital works well with traditional is important. And I think the value of face-to-face doesn't go away. And I think most of all, I think what we were trying to cover here was that, you know, the taboo of debt advice should no longer be there. You know, we're living in, you know, the 21st century. We have the tools available to us, and we should be comfortable using them. And there, as Matt was saying at one point, there are 1.6 million Londoners who are highly indebted. And so you are not alone in accessing that debt advice. And by speaking to experts, you can make sure you get the right advice and you're ahead of that problem, as opposed to approaching it much later and having a more difficult time solving it. So I hope this was helpful to all of you, and hopefully we'll see better engagement with digital and enhancement of our services going forward. And hopefully 2020 is a great learning year for us to roll out some amazing tech in the future. Thank you very much and have a lovely evening. Thanks.